2025 has been a really good year so far, but it doesn't come without a few stocks lagging and not doing well. And I wanted to go over the 5 stocks that are not performing well in my portfolio, share with you what I plan to do with these stocks. The first one I'm going to cover is Google. Google is down about 2% year to date. I think the main reason is after their earnings, the market really sold the stock off. And my observation is they're spending too much money in that data center, trying to build out all kinds of AI infrastructure. And right now, the AI investment is not showing top line revenue growth, profitability, and additional cash. Instead, it's burning a lot of cash without showing a lot of result. Now, the company says that this is a strategic move, and that's one thing. But the market is really voting with its buying or selling of a stock. And the market does not like the excessive spend in CapEx that Google is doing. Now, I'm holding my shares of Google Alphabet. I'm giving them a couple of quarters to figure this thing out, whether they need to lower CapEx spend, make their fundamentals look far better, or begin to show that, hey, here's our AI business. It's generating top line growth. It's generating fundamentals that are positive. So I'm going to give it some time. I ran my own valuation of Google Alphabet using free cash flows and earnings per share. And I get to a discount of 21% on the stock. My price target is $226 per share, and $186 is the current stock price. Now, I'm holding on this stock because of their strategy. I'm waiting for them to communicate, hey, we're either showing AI revenue to match to that CapEx we're spending, or hey, we're going to lower CapEx because we have enough infrastructure built for the AI part of the business. And that's why I'm going to hold, even though it has a discount, because I'm waiting for that update on the strategy. But this is my valuation on Google Alphabet, and I'm going to wait this one out, give them 2 quarters to figure this thing out. Nike has been trying to turn their business around. They've had a couple of rough years, and the stock's really been sold off. And it was an opportunity to buy a great company at a lower price. But so far this year, the stock hasn't been doing all that great. It's down 3.5%. And the reasons for it, I believe, is their performance hasn't been very good for quarters. Their revenue is contracting and their profitability is waning. They have a new CEO, which is a move in the right direction, somebody with new strategy, new ideas, and that really knows Nike. The CEO spent many years working there. Now, when I look at Nike, fundamentally, the PE is a little bit high. Analysts believe it's a buy and discounted by 25%. Now, my discount on Nike is 23%. So I'm fairly close to what analysts are saying. And I'm using my best estimate on free cash flow as a forecast as well as earnings per share. So it's a reasonable discount on a very good business. Now, on this stock here, I'm actually selling a few shares. The reason for it is I want a higher level of cash. I think we're in an expensive market. I want to have some cash available. Should we have a strong pullback, I could buy into that pullback and make more money. So I'd rather earn about 4% on cash versus waiting for Nike to figure out their business. I'm optimistic they're going to figure it out. So I'm not selling the whole position, but I'm going to give the CEO a couple quarters to show that the stock is on the right track, and I will buy shares once I see that strategy working. Pfizer is not having a good year so far. Their stock is down 3.5%. And this stock here is a turnaround story. And they have been growing the revenue really well for 2 quarters. I really like that. And the market has not yet responded to the reality that Pfizer is now growing and they're a very profitable company. The forward PE is only 8.64. Wow, that looks discounted. Analysts think it's a buy, discounted by 25%. And when I look at the stock value, I think this stock is actually discounted by 34%. So I'm just going to hold my shares of Pfizer. I think as they continue to show quarter after quarter strong growth around the 30% growth rate on the most previous 2 quarters, the market's going to realize that this is just a very valuable company that pays a high dividend, and the stock I expect is going to rally for 2025. Therefore, I'm just going to hold all my shares for now. As soon as the rally starts, I'll start to buy shares in Pfizer. And the final stock that I'll cover is Lantheus Holdings, which is a healthcare company. And the stock is down over 10% year to date, showing the market just really is not liking this stock. Now, the fundamentals show that this company is discounted. Forward PE of 12. Analyst believes it's strong buy, discounted by 65%. And when I do my valuation of Lantheus, I agree with that discount level, but the market is signaling that it just does not like Lantheus, and I'm not sure why. So I'm selling all shares of Lantheus. It's not working. I don't want to be sitting around and wait for it to drop another 10, 20, 30%. I'm going to sell all my shares and keep track of this company, watch it, and see if there's a better time to invest in Lantheus. But for now, the stock's not working, and I'm going to sell all shares. So those are the 5 stocks that are underperforming this year. It's been a terrific year so far, but investing when you have a portfolio of 40 stocks, some of them are not going to be outperforming at in the current quarter. But I need to be critical of those stocks and see, are there some that are keepers and are there some that I need to sell? Make decisions so I can continue to make my portfolio stronger and better, continue to have very good rates of return to build my wealth. I hope you found my video interesting. I'd love to hear your comments on the 5 companies I covered. If you're an investor, what you plan to do with those stocks. And I really appreciate you watching the video.